Good morning. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve. How you doing?
Hello. Yeah, good, thank you.
Good. Um, okay, let's get straight into the latest headlines. So, more hawkish Fed rhetoric yesterday. Cleveland Fed President Mester stated that front-loading Fed rate hikes is appealing and that raising rates to around 2.5% is appropriate this year, with further rate hikes next year. She also added that she thinks a 50 basis point increase is likely at some meetings. So we're going to see that ramp up pretty quickly by the sounds of things. US bond yields continued to increase further yesterday. The US 10-year now moved above 2.4%, which is its highest level since May 2019, before we saw a slight correction. We continue to see more losses for the Japanese yen. That's at a 6-year low as these global bond yields increase. There are expectations of a very dovish Bank of Japan monetary policy um, going forward, and they are wary over the sharp losses. So that may mean there is some intervention in that at some point. The Russian advances continue to stall. This evidence suggests that the Ukrainian forces are regaining ground in some areas, which is good, but the sustained attack on Mariupol has continued, and defeat for Ukraine here would be strategically important for Russia. The UK has reported its latest inflation numbers. That's at its highest level in 29 years. The latest data recorded a headline rate increase to 6.2% from 5.5%, which was ahead of the market expectations. So that is obviously a bit of a worry. Today we do have the spring statement from Chancellor Rishi Sunak in the UK, and there are strong expectations that he will announce a support package primarily aimed at cushioning consumers from the impact of the surge in energy costs. There's also the potential for a shift in corporation tax, especially over the medium term. So we'll be keeping an eye out for that later today. That's due at 12:30 UK time. So Steve, let's get stuck into some charts and have a look at the price action in various markets. What's catching your eye this morning?
Well, FTSE really, in the last hour, we've seen a decent rally in FTSE. It's taken out, well, it's the highest level we've been now since 28th of Feb. Where if I look at the daily chart here, we can see there's a band of resistance that we expect around here, quite a wide range. Almost a 200-point range, but we should find some decent resistance up here. But nothing seems to be stalling the FTSE. That's benefiting from the rise in oil prices. On the DAX side of things, that's also looking quite perky, although maybe not quite as much as the FTSE. Again, it's made a new weekly high this morning, and yeah, these are sort of like the best levels we've seen since the end of Feb. So had a little bit of a pullback in the last hour or so. We formed a little bit of a, on the hourly chart, you can see this evening doji star formation. So that looks pretty negative. However, I do expect dip buyers to come to the rescue at some point. I suppose if we look at the 4-hour chart, you've got like a 9-bar moving average there coming in at support just below. But dips expected to be bought all the way down to the 14,100 level. So a nice big amount of support there. We look to be targeting resistance. We've completed this inverse head and shoulders formation. That still has potential for a move up to 15,500 on a more short-term, medium-term basis. And looking at the Dow again yesterday, positive day, highest levels since 17th of Feb on the Dow. We've now got up to just short of a 78.6% Fibonacci retracement level. So slowing down a little bit as we approach the 35,000 band of resistance, 35,100 actually it goes up to. But on the short-term basis as well, over the last couple of hours, we've seen the market sell off, but dips look to be bought again on the Dow Jones. Nasdaq has been flatlining overnight after a really sort of strong move yesterday around about 1-2 o'clock. We had that break up through resistance at 14,470 and It's stalled now just under the 14,700 mark on Nasdaq, but still looking pretty firm overall. From a weekly perspective, we saw that. Remember, we saw that bullish outside candle last week, which is very positive indeed, and highlights a good potential for further upside. The S&P, that got up to above 4,500 on the daily chart. We're looking at a 50%. Well, let's redraw this, because that was actually drawn from this low here. So from the previous high, all-time high, down to the low, the swing low of 4,110, we've now seen what's approaching a 61.8% fib, which is a common retracement level as far as Fibonacci is concerned. Also, in the meantime, we've formed this double bottom pattern on the daily chart. Here's the neckline here, so that targets a move higher. Looks like we could be really putting pressure on this head and shoulders formation that we've drawn in. Breaking the neckline here targets a full retracement all the way back up to the all-time highs. So the neckline has been broken. So dip buying again looks to be the order of the day in S&Ps. Looking at commodities, crude oil, as we said, is well, stalled yesterday, but did form a new high, the highest levels that we've seen since the 9th of March, but stalled and closed a bit lower, although the market has got off to a slightly more positive start. And remember, we talked about the news sentiment. These arrows are where we've got news sentiment buy signals from the Acuity products. And as we said, this one was an 80% confidence factor. So that looked really good. And the market has extended really nicely higher. So that's played out really well. It looks like we've had a little bit of a correction lower. So it's been dominated, the 4-hour chart's been dominated by this candle from the 22nd March between 6 and 10. So really need to sort of break above this resistance at 112.87 to really open up the upside. If we do get a break below 106.50, 106.50 to 106.70, then a deeper correction is expected. But again, we'll probably find support around about the $100 level from a psychological and a technical point of view. On gold, we're seeing this head and shoulders formation, which has played out, hasn't quite attained the measured move target, but it has had a really decent move down towards the 1895 level. We seem to be hovering above this in some sort of triangle formation. We'll have to redraw after yesterday's price action. It does feel like we are expecting a break here, and again, new sentiment favors the fading this sell-off and looking to get long. However, the technical picture isn't looking so rosy. We can see resistance today should come in the form of 1935, support anywhere between 1913 and yesterday's low at 1910.68. So a break really below there should open up the downside for another retest of this 1895. A break above should really target a move towards the 1950 level. So really middle of the road, although I would say the feeling is it's slightly under pressure. I tried to fade this yesterday on the gun to head, got stopped out. On the cryptocurrencies, Bitcoin seems to be holding quite nicely, although it is facing resistance above. It's stalled in front of the downward trending resistance line, stalled at 43,370. Resistance coming in at the moment just around about 44,000, and we've seen a nice impulsive move higher. However, we've had a little bit of a pullback. So on a 4-hour basis, looking a little bit fragile. 4,180 providing support, 43,330 break above there should retest this downward trending resistance. And that's about it from my markets, Joe. How's FX looking?
Let's have a quick look, shall we? So this is the dollar index. So yesterday we did see a bit of a reversal take shape. So early on we saw some strength up to 98.97, but then we saw the sellers step back in and drag it lower to finish lower on the session. We are posting gains today, up by 0.16% as things stand. Overall, still looks pretty healthy while it remains within this bullish channel. So still looking for higher prices on the US dollar. We did see continued strength in the Aussie currencies yesterday. This was against the Canadian dollar. This was against the Swiss franc. So we saw a breakout here above this resistance at 69.32, clearing that level quite easily after a couple of days of having a bit of a go at it. But finally, we saw the break yesterday on a closing basis. So that looks pretty bullish for the foreseeable. This looks pretty interesting. This is Aussie yen. So really strong breakout here, as you can see, above that 85.80 level. And prices have continued to move much higher since. This blue line, I was looking for some sort of resistance yesterday and had to go quite some way back to find it. And it was back in 2017 in September. And interestingly, if you have a look at today's candle, you can see that we've attempted to move above that level, but as things stand, we are posting a reversal candle on the daily chart. So that may be an indication that the buyers have run out of a bit of steam, which wouldn't be a surprise given how strong that move high has been. So some potential there for a fade on that on an intraday basis, I think. So that may be my gun to the head trade in a little while. Aussie US dollar, that made new highs above this resistance here from the 7th of March and looks to be now targeting this 75.55 level. So although we remain bullish on the dollar index overall, the Aussie is outperforming it at the moment, and we're seeing higher prices there. If we take a look at Euro US dollar, that continues to just trade around this zone really of 111.20 ish. Still looks bearish overall, so still expecting to see lower prices, but doesn't really appear to be many opportunities in the very short term. Euro sterling continues to move lower, again approaching support at 82.75, and then again these lows down at 82.02. So still expecting to see lower prices there, although we may be in the process of forming a bit of a bottom here. So if this remains intact and doesn't get broken, then potentially we are forming a bit of a rounded sort of piece of price action there, which could end up being an inverse head and shoulders. So keep an eye on that for now. Let's have a look at New Zealand dollar versus the Japanese yen. Obviously, the yen is in focus at the moment because we continue to see this mad weakness on it. Really strong move yesterday on New Zealand dollar, Japanese yen, smashing through that 82.50 resistance. A little bit stalling today, so maybe a chance for some short sellers to get something out of that if they're brave enough to try and fade that move. This was also quite interesting. New Zealand dollar versus the US dollar looks to have completed an inverse head and shoulders bottom. The break above resistance at 69.25 for me confirmed it, and we're seeing a bit of weakness today. So maybe an opportunity to buy into that weakness today, or a retest of this neckline before it continues to move to the upside. In terms of the measured move on that one and what we can target on the upside, let's take a measurement from the head to the neckline, project that higher. We've got prices up at 73.21. So some really decent upside potential on that, actually. We've got this downtrend resistance to try and overcome prior to that. But yeah, looking pretty rosy here on New Zealand dollar versus the US dollar. I think that's it from me.
Nice one.
Okay, so gun to the head trades from yesterday. Steve, you already mentioned you were stopped on gold, ending your winning streak. We also had a win on dollar Swiss of 15 ticks on 0.44R, so that sort of softened the blow a little bit. What do you fancy today? Anything?
Well, again, I keep getting drawn back to gold. I think gold's quite an exciting market at the moment. There's good potential, really based on this weekly chart. That's an evening star formation. That's a very negative looking formation. So let's get rid of that chart, clean it up a bit. This week we've had a little push higher up to 1941, and we've settled back down to close to where we opened at the start of the week. We've been down to 1910, so nice like $30 range there. Breaking it down onto the 4-hour chart after yesterday's, right, let's remind us of yesterday's bearish day, bearish engulfing candle there, and a little bit more positive this morning, but not a lot. So really comes back to question. It is a bit of a flip of a coin. However, the triangle formation, the preceding trend was lower, so the potential is for this to be a continuation pattern. Still got to wait and see how it plays out, but from a risk reward perspective, I think that offers an opportunity to fade this. After buying it yesterday and failing, we saw that move down to 1910. That's put a bit more weakness in it, so I'm looking at maybe fading this current move up that we've seen in the last couple of hours. So selling into that. That's an entry at 1926, and I'm going to keep the stop pretty tight, to be honest. Maybe even just have a $6 stop. 1931.92, targeting a move of about 3-to-1 risk reward. Could be a bit more aggressive than that, because I think if we get a break of 1910, we could see 1900 being visited. So what does that give us? Yeah, I mean, that's around about the level I want to target. So we'll go, I like to have nice round numbers. 1901.92 I'm targeting, 4-to-1 risk reward on that. Yeah, happy with that one.
Yeah, good luck. Okay, I've got a couple of options then today, both in FX. First up, we've got Aussie yen, just because we saw on the daily that it had approached a huge level that we've not seen since 2017, and on the daily candle posting a bit of a shooting star maybe. So potential for a reversal there following that really steep move to the upside. So it does feel a little bit sketchy because obviously it's been so strong. But you know, I like what I'm seeing on the daily candle. The other one was the inverse head and shoulders setup on New Zealand dollar versus the US dollar. But the one I'm really favouring is probably the Aussie, actually, just because of that candle there. So it is speculative, as all of these trades are. So I'm going to sell it at current prices of 90.21, targeting a move down to 89.07 with a stop loss at 90.70. So looking for 2.32R on that one for a little bit of a pullback into that key level.
Nice one.
Okay, so data-wise today, as mentioned, we've got this UK spring statement at 12:30 UK time. At 2:30 UK time, we've got the US EIA oil inventory number. And then tomorrow we've got a bit of central bank action from the Swiss National Bank and also from the Norges Bank. So a couple of bits to keep us interested tomorrow morning. But yeah, that's pretty much it from us, I think.
Nice one. Thanks, Joe.
Anything else to add, Steve?
No, good luck, everyone. Happy trading.
Yes, indeed. Have a great day. See you tomorrow.
Cheers.
Bye.